The big headline coming in from the U.S. this morning is that 43-day U.S. government shutdown, the longest in the history of the United States, has now been called to a close with President Trump signing the bill. The other big headline that we're waiting for is the India-U.S. bilateral trade agreement. When will that be inked? Remember, the indicated timeline was by fall, November, we could have a deal. What we have seen the Indian side say is that from our end, the negotiations rest, and it is now up to the Trump administration to sign off on the deal. President Trump, speaking in the White House a few days ago, said that we're close to a deal. He also indicated that perhaps India could see a reduction in tariffs, but in his words, we'll see. So we don't know yet on both those counts whether we will see a deal this month or whether we will see a cut in tariffs. But joining me today to talk about all things India and the U.S. at the U.S. India Strategic Partnership Forum are two gentlemen who've been involved very closely with the India story and with the India-U.S. bilateral relationship. John Chambers and Mukesh Aghi, what an absolute pleasure. Thank you so much for joining us here on CNBC TV 18. John, we were talking exactly this time last year. You were very confident about the fact that the U.S.-India bilateral relationship was only going to move further and forward. And your view was that this is one issue where there is bipartisan support between the Republicans and Democrats. How do you now see the relationship in the fact that we still don't have a deal? There is no clarity on when we will get one. And there has been a sort of pullback on both sides.
Well, Shireen, we often think in business in 3, 5, and 10-year terms. And as you and I have talked over the last 25 years about the opportunity between the U.S. and India to have a strategic relationship that'll be a model for the rest of the world, we've hit every objective. The GDP growth in India, you know the numbers from 20 years ago when I bet on India as my second reward headquarters at Cisco. India was number 12 in GDP. Today, 20 years later, we're number 4. You and I talked about, could India be a startup nation? Could the Prime Minister's vision of startups really make a difference, and how would it occur? And you had your Young Turks group. And for your audience, you've moved from an area that there was not venture capital investments in startup in India, nor was there the role models to really build off of. And who's the number 1 IPO market now in the world for IE and startups? It's India. We talked about Make in India and how important that was to the future of the country. And many people had a doubt, could India become a powerhouse? And yet you watch what is happening. If you'd watch our sessions over the last 2 days, you'll see so many of the American companies betting on manufacturing here in India. And so you now see our constituency, and we have 450 members at U.S. India Strategic Partnership Forum. When Mukesh polls the group, they're all in and they're all investing in the future. So they see this as a short-term bump. They don't view it as a way that's going to disrupt our long-term relationships. And I absolutely agree with that. So I am very optimistic on what we're going to see between the U.S. and India. And more importantly, I'm very optimistic India will become the number 1 GDP country in the world, which nobody would have dreamed of 4 or 5 years ago when we first said it.
Yes, and I know you've got almost all your forecasts right here that you made on the show.
Actually conservative.
Yes, but I just want to double down on the point that you made about polling your members and the mood within the U.S. CEOs at this point in time. So they're saying that, look, we understand what's happening as far as the tariffs and the deal is concerned and that uncertainty, but we continue to remain committed on India. So are they willing to invest more on India? Are they willing to continue to do GCCs in India, move manufacturing to India? What are they telling you?
All of the above. And Mukesh will go into a little bit more detail on it. But almost no CEO is going to bet against India as a key partnership as you move forward. And businesses do not make decisions on, is the deal going to get done this month, next quarter? When you bet on the movements you just said, you're betting 5, 10, 15 years out, and you're committing billions of dollars. So business tends to think long-term and not in the election cycle or what's going to occur in the next quarter. I think that's very good for the relationship, because what holds us together are not just those bridges we built over time. It's the network of inner relationships between government and business. So if you'd watched the last 2 days, you'd see from the government leaders in India, you'd see from the business leaders from the U.S. a united view in terms of what we can do together. And so that's why I think that whether it occurs this month or next month isn't as important as it happens. And the business leaders are not flinching at all in terms of the direction. My own self, I'm doing more and more of my growth of my startups, 24 of them here in India. And I've got 11 unicorns now and 2 decacorns with some pretty good growth. But again, it's US and India working together. Mukesh, maybe a little bit of detail from your side and what you've heard.
Well, I think number one is a deal does not define the relationship between the two countries. The relationship is much deeper, broader. It's on technology partnership, it's on defense partnership. In fact, US just signed a 10-year defense pact itself. It's on students, it's people to people. We have around 5 million Indian Americans driving the relationship. So I think we should not just stay focused on the deal, if it's happening, not happening. Yes, it does have impact on 50% tariff on a lot of India's export. But what we are finding is those businesses are finding ways to find a solution to the exports itself. They're diversifying. But overall, just to follow up on John's comments, I have talked to around 70 plus CEOs last 90 days. Not a single one has said they will move their investment out of India, or they will reduce their supply chain out of India, or they will basically slow down on GCC. Everyone is very bullish on India. They will continue the process because they realize it's a $4 trillion economy. It'll be a $10 trillion economy. They would like to gain market share from that economy itself. But more important, it's 50% cheaper to produce goods here. And so they're able to leverage that. If you look at the GCCs, 60% of GCCs today are American. And they are generating in hundreds of thousands of IP out of India for their products itself. So overall, I would say the sentiment is still very positive, and it's going to keep on moving in that direction.
What's fascinating is, and your audience may not get it, is that when you have a long-term relationship and then you have a bump in the road, then everybody gets a little bit concerned, emotions start to get a little bit higher. When you solve that bump in the road, you actually bring organizations and countries closer together. So in my terminology, I'm a sales guy at heart, as you know. When a customer has a real serious problem, whether it's created by the vendor or by the customer, when you solve that and you go through that stress, they end up buying a lot more later than otherwise. So actually, I think periodic bumps not only are natural when you're trying to do things that have never been done before, and nobody's ever envisioned what India and the US could do. And I actually think it makes the relationship stronger long term. What happens in a quarter or two is not going to affect the relationship long term.
And I know it's unfair to speculate on whether we will get the deal done this month, which was, as I said, the indicated timeline. But what are you picking up on the possibility of a deal happening within this month or within this calendar year, Mukesh? And secondly, even as far as tariffs are concerned, broadly the expectation was that we'll come down to about a 15% tariff rate. And of course, there will be some give and take on things like soy and corn from the Indian side to the US side. What are you broadly hearing on the contours of the deal itself as and when it gets done?
Well, the president said that it'll get done very soon. There's no definition of soon. Is it this week or this month? It's hard to predict, because I think when you have a decision-making process where it goes to the leader itself, we just have to wait for the opportunity so he can announce it. Overall, what we're hearing is that the tariff numbers will be much, much lower than 50%. It is important to understand that the impact on India's export has been substantial. If you look at the month of September, India's export to the US were down by 12%. When you look at October, it is going more into the double-digit again scenario. And what we are seeing is impacting mainly the garment, the shrimp exporters, the leather guys, the low end. But the high end continues. I mean, so look at Apple, the largest exporter from India, they're exempted from tariff itself. So I think overall, India entrepreneurs are finding ways to deal with this issue. But I would say that President will take that decision, announce it very soon.
Well, one of the other issues which is of concern is the position that President Trump took on H-1B. And I want you to explain to us how you're now interpreting the president's comments to suggest that, look, we need to bring in skilled people into the US, and talent is scarce in the US. In an interview to Fox News, how is the US CEO community interpreting President Trump's change in tone as far as the H-1B issue is concerned?
Very positively. You have to understand that when you look at on the AI startups, almost 70% have some kind of an Indian ingredient in them. Startups are creating jobs in the US. And when we look at from the Silicon Valley, almost 75% have some kind of an Indian ingredient in them itself. So what we need is a talent, and H-1B provides that talent. We have a shortage, and I think President addressed that very clearly on Fox interview that H-1B is good for America. But when you look at the $100,000 tariff, the impact is very minimal, because when you're talking about 6 years or $100,000 tax on that, if you may call it, it's $15,000 a year. I mean, if you're paying $200,000, $250,000 a year salary, the impact is very minimal. So I think there's more noise than substance on that issue. America needs H-1B, America needs the talent, and America needs good immigrants. So I think this solves the problem.
You know, let's talk about AI, John, and what's happening in the US at this point in time, and how you see India benefiting from this hundreds of billions of dollars in AI infrastructure spend. I mean, company after company, including your former company, Cisco, you know, betting big on AI infrastructure. There's, of course, the debate on whether we are already in bubble territory. Are we heading into bubble territory? How do you see what's happening on the AI infrastructure side?
Well, you and I started talking about AI 8 years ago when nobody could even spell it in terms of the implications. I had the opportunity not just to be a front row seat in the internet, I was in the middle of the game, and now with 24 startups, all 24 of them are AI based. There are parallels between the two in terms of it will change the way you work, live, learn, and play. It will change in terms of the economic strength of a country. Whichever country led in internet growth in the 90s also led in GDP growth. The same thing will be true of AI. It will create a whole new class of jobs. It will create an opportunity for solving cancer, if you will. The productivity of growing 7 to 10% a year for every major company in the world is going to happen. So I think we're at the very early innings of what's going to occur here. What is different is it's moving at 5 times the speed of the internet, and it's moving at 3 times the output. So a startup here in India that is really well run, instead of developing a product in 2 years, bringing it to market in year 3, getting 5 to 7 references, $1 million run rate, and in years 4 and 5, getting to $5 million, that's a unicorn in the making. They develop the product in a month. They take it to market in the next quarter. They hit their run rate of $5 million in 12 to 18 months. So you're beginning to see this scale with tremendous speed. So I think it's very important that India lead in AI. And the common theme that you're going to hear from me, India and the U.S. working together can really lead for it. I think the potential of driving GDP for a country and adding 2 points to the GDP growth is very much there. And when I said a year ago when we were together that I felt that AI would drive the stock market for this year, a lot of people really weren't focused on it at that time. It clearly did. And it's just not the magnificent
and many argue that it is perhaps averting a U.S. recession as well.
No, I disagree with that. If you have major productivity and improvement in profits, you're going to see economic gain and growth. As you really look at what's going to occur, you see the evaluations of companies going up. Now, what they have to do is retrain their employees and create the opportunities. So I think the challenge that goes with this is how do we prepare the next generation of workforce? We were actually talking about it in the last sessions with one of your chief ministers and what they're doing to prepare that from an AI perspective. But I think it actually accelerates the economy by a pretty fair amount as opposed to reverse. Now, are there going to be some spectacular train wrecks? Shereen, absolutely. And you're going to sit here, John, you said AI is in the early innings. How do you explain this? You're going to see the problems occur at 5 times the speed as well. But if you just track the AI index, if you will, that's where the leverage is going to occur. And it was controversial a year ago to say, does every CEO in a major company view AI as their number 1 or 2 priority? They would not say that. Today they do. So early innings, and I'm very optimistic what it means. And I've seen the results in terms of the evaluation of companies.
You know, Mukesh, speaking to chief ministers, you've been speaking with Chandrababu Naidu, Revanth Reddy, and many others. And of course, India is trying to draw in big tech investments. We've just seen that $15 billion commitment made to the state of Andhra Pradesh from Google. What's the indication that you get on that kind of investment into India?
So this is the largest single investment India has seen from Google, $15 billion. We're seeing much big numbers coming through. I mean, say Amazon is setting up a major data center in Telangana, $10 billion investment. I think what you're going to see is more and more Japanese coming in. And the reason I say that is there is a corridor which is India-Japan, India-US, and US-Japan corridor. Not a quad kind of, but a triangle itself. Because we are seeing that the Japanese are moving much faster, but they're struggling with the resources, especially talent, and India becomes from that perspective. So we are seeing a very large pipeline coming through. But from a US perspective, that will continue to grow because they are seeing India as a market opportunity. They're seeing the talent very cost effective, both from a technology perspective and from a manufacturing perspective.
You know, anything on the table from the Indian side that US companies want addressed? A lot of the friction points have been dealt with, have been addressed, but anything significant left on the table that US companies want addressed?
Well, I think what we are seeing is a shift in the aerospace and biotech because we have a challenge of talent in the US. And so they are willing to do co-production. If you look at Lockheed, Boeing, they're putting up joint ventures with the Tatas and others to basically build a strong supply chain because the cost of producing some of the defense equipment in the US has gone up dramatically. So the way I see it, what the pharma industry did, the generic was able to bring cost of drugs in the US to a lower price point. I see the same thing happening going forward next 20 years. On the defense side, where Indian companies will play a pivotal role. You look at the space startups, you look at the drone startups, which are selling for almost 1/10 of the cost being made in the US. So that shift is happening.
So more joint ventures, more joint production, is that what you envisage?
Absolutely.
John, you talked about all the unicorns in your portfolio. How many heading to listing now? I mean, you've got Rubrik, which is the big story, but how many more can we expect to list? And what do you make of the India IPO story today?
Well, in the sequence you raised it, the other major unicorn was Bloom, and then Bloom Energy, KR heads it up, has been, I think, the #1 stock in appreciation in the U.S., 1,000% this last year. And what they provide is energy to these data centers and others at a remote site. And instead of taking 3 years to build up the energy capability, they can do it in 3 months. So you see them winning opportunities like Oracle, et cetera. And I'd be very surprised if they don't expand here. In terms of the listings, I think you need to be in the area of probably 200 to 300 million, growing at 50 to 100% to rethink about an IPO. Now, what's going to change in this market that is going to be interesting to your young Turks is it used to take 12 to 15 years to create a IPO opportunity. As the AI accelerates all this, I think you're going to see those occur in 5 to 7 to 8 years, and you're going to see growth rates in the 100%. And so they aren't just anticipating future growth, they're being built for profitability. So I think the IPO market's going to be good this next year. When we talked about it last year, I said it's going to start slow, but the second half of the year it's going to be good. M&A activity is seeing the same pattern in terms of the direction. So in terms of India, I think this is a window for you all.
Well, you know, we're talking about energy as well. Let me address that issue with you, Mukesh, because the expectation of the Trump administration is that India will enhance its energy supply from the US. And of course, we've now seen a reduction as far as the Russian purchase of Russian crude is concerned. President Trump has, of course, made this an issue and linked that to the 50% tariff. But how do you see the energy relationship moving beyond this near-term friction?
Well, what we are seeing is both on the fossil fuel and renewable strengthening. On the fossil fuel, we are seeing more and more orders going to the US. I think it makes sense for India to buy more US energy because you can reduce the trade imbalance. That's one. Two is India needs energy security because 86% of the energy in India is still imported. And so it makes sense. Now, the question will be the price because every dollar a barrel of oil goes up, it has an impact of $1 billion India's foreign exchange. So I think the US has to be competitive. But more important is India is geopolitically working with the U.S. In the first term, India reduced its energy purchase from Iran, which is 30% down to zero itself. Then it went to Venezuela. It was asked to reduce from that perspective. So I think there has been some kind of a collaboration taking place between India and the U.S. Now, on the renewable, what we're seeing is the Indians, panel makers are exporting from India into the U.S. itself. And we have seen some of them setting up plants in Arizona, working on the renewable. Even the priority with this administration is not so much focused on renewable, but on fossil fuel, but there is a momentum taking place. So I think the collaboration, which is very strong on the defense side, also is moving more on the energy security between two countries.
Okay, forecast time, John. So I'm gonna end with forecast from you, because you always lay out what you believe the predictions are going to be for the year ahead. 2025 is almost done. 2026, your top predictions.
I think it's going to be another good year in the market in the U.S. and in India. I think any company that does not have a very good AI strategy and have it deeply embedded in their capabilities. Walmart, I interviewed the CEO, Doug, in a podcast the other day. They are all AI in terms of how they will drive productivity within their retail chain. That's occurring in every group. So I think it's going to be a very good market in total. This year, the market was often driven by AI expenditures or the providers of AI infrastructure. I think you'll see next year, as that productivity restarts to take hold, you'll see the price earnings and the profitability of the other companies occur. Other predictions in terms of the approach, I think you're going to see another good year for IPOs. M&A activity will occur both in the industry and established companies buying them. I think you'll begin to see CEOs and CFOs, and I think this needs to happen in India as well, build in a 10% requirement for next year's budget in terms of productivity. And they're going to say to their organizations, you've got to think out of the box to get there. Don't do incremental changes. We make a difference in terms of the total approach. And I think there are going to be some train wrecks. When you have this much money being spent this fast, and if it is 5 times the speed, which it is, you're going to see some spectacular train wrecks. For your audience, don't get distracted on the one-offs. Look at it as a total play in the AI market. So I'm optimistic about next year. Geopolitics, we can't determine that. I think we'll navigate through those issues on a global basis.
Yes, unfortunately, that is not in your control or Mukesh's control, and what happens as far as geopolitics is concerned. But would you like to hazard a guess, Mukesh, before I let you go on how this is going to play out on geopolitics?
Well, I think the tariff issue will definitely settle down between the two countries, and they're going to focus more on a lot of other critical issues together. I believe India's foreign policy and strategic autonomy also will start seeing some positive result itself. Because what we're seeing is the Trump tariff is driving a lot of companies to find alternative solutions across the world itself. And India has taken a very proactive approach trying to work out an FTA with EU, work out with New Zealand, and work out with other geographies. So you will see a much more stronger positioning of India in 2026 than what we have seen in 2025.
And you've been very gentle with me, and I appreciate that. But in terms of prediction, I think we'll be sitting here at this time next year, and we'll be talking about the predictions for 2027, and the issue on the tariffs will have long since moved past.
Well, that certainly is the hope that it won't take that long for the tariff issue to be resolved and to be done with.
The major thing is we won't consider it a major issue. We'll consider it a bump in the road in terms of the total outcome.
Well, let's also see the way that the U.S. Supreme Court rules on this, and whether we will see some sort of indication on that front on how the tariff issue is going to move beyond this. But John and Mukesh, always a pleasure. Many thanks for joining us here. And we will check back with you on the predictions that you've made, and we look forward to speaking with you as and when we do have more details on if we have a deal and when we have a deal. Many thanks for joining us. With that, it is time for us to wrap up this edition of CNBC TV 18's Global Dialogue. From all of us here on the team, goodbye and many thanks for watching.